Good morning, everybody. It's Jane Johnston with the Briar Hill Group at Remax Camosun. I'm here with...
Hello, everybody. It's Andrew Plank with LePage. How are you doing today?
And we're here for He Said, She Said, They Said, a real discussion on real estate in Victoria, BC. So today we're going to be talking about BC assessment. But first...
a word from our sponsor.
Let's do the stats.
Okay.
All right. Let me just find them. Here we go. Alrighty. You want to do the top part?
I shall do the top part. So so far in January, we have 150 unconditional sales. That is compared to 646 for the full month of January last year. We have so far 273 new listings, as opposed to 911 in the full month of January last year. So we're more than halfway through the month. We are only a third of the listings we had last year. I do expect we're going to see more listings towards the end of this month. Active listings currently 710 versus 1,321 last January. So still really low inventory.
Yeah, and so that would have been at the end of the month, the full inventory, 1321. So yeah. I saw this stat yesterday on the Market Watch. So this is looking at the stats for the last 7 days. And it was, to me, very encouraging. So new listings are 126, but only 98 pending. So that means for every 12 listings that are coming on the market, only 10 are selling now, as opposed to 12.
Correct.
Price decreases 10, price increases 14. We've talked about that numerous times. Sometimes it's a typo. Sometimes the sellers and the agent enter the price wrong.
And that can apply to price decreases too, of course. But when we see the increases, we're curious in this market as to why there is 14.
Okay.
Yeah.
You're going in and out. Is that me or is that you?
You're fine for me on this end. Maybe if anybody's watching, they can chime in the comments. But I think we're okay. It's all clear for me.
Okay, so interestingly, I just had a listing that did not sell. Probably the only listing in Victoria. It was overpriced. Price is determined not by the realtors. We provide the information. The seller determines price.
And value is determined by the market.
Yeah.
So, and that's an interesting, that's the segue into what we're talking about today, because a lot of people will receive their BC property assessments and think, wow, my home's gone up a lot in value. And it probably has. But that number is a number that we can't rely on for pricing your home. Not accurately.
So let's just go. There's a glossary online of terms. So we'll just go and see what it says about BC assessment. I'll just share my screen. I just went directly to their website.
Right.
So BC assessment.
How it works, what do we do?
Yeah.
So I'm laughing here because are we just providing a service here when we're doing these videos where we just Google things that other people could Google? We're just going to Google it for you.
And offer our opinion.
Yes. I know. I'm sorry, I'm being a jerk.
I just want them to see what BC assessment thinks what they do.
And not everybody even knows that there's this resource here. I know I'm totally being a jerk. I'm so sorry. This wasn't about you. This was about okay, going on.
I can't hear Andrew.
Good. It's best that way.
Okay. BC assessment appraisers analyze all real estate sales in their area. So they look at what's sold and develop common units of comparison and corresponding values. We actually did another more in-depth video on this.
We did. I was thinking though that this is actually there's a correlation between this and perhaps they have their own version of the HPI in their own little background. Where they're looking at
index.
Yeah, the home price index, which is something that it's a tool that our real estate board accesses and uses to look at property value changes over time for a representative home in an area. But that representative home in that area, obviously, you can't track its value to say that this is what your own property value is.
So one of the things they say is they review similarities and differences between properties to arrive at a uniform assessed value for a particular property. So let's just look at this in English. What they do is they take all the houses in an area. So let's say Camosun, where I live.
Mm-hmm.
Then they look at what's sold. And they say, okay, this one has a double car garage. This one has a suite.
This one's a larger property. This one's a smaller property.
Yeah. Right. And they look at the value of the property, and then they look at the value of the building. So why this doesn't work is if you were to have two, let's look at a condo building. So if you were to have two units in a condo building that were built at the same time. So let's say they paid $100,000 and somebody took care of their condo and they upgraded it. And then 10 years later, they sold it and they sold it for $200,000. This would increase the value of this one. However, if this one sells first and they both bought at $100,000 and then this one sells for $150,000, it affects this one. So it all depends on what properties are selling, whether or not somebody has actually registered their improvements with the municipality as well.
Let's take a step back. The reason that BC assessment exists one of the reasons is to help the municipalities assess taxes. And so it's a relatively fair way to say, in general, homes are worth this much. And if all things being equal, a mansion on a hill versus a little, shack on a corner are going to be different values and are going to probably pay proportional different tax values. And in general, it can even out, but for accuracy, it's very difficult because using Jane's analogy, you look confused. Jane, was there?
I can't hear you, but it's okay. You came back.
Okay. Using Jane's example of the two condos, if there's, two condos in one building, they could have different outlooks. BC assessment doesn't come in and view them. They could be, and again, as she said, one could have been updated a lot, and then it sells. And then what she's alluding to is when it sells, there's now data for BC assessment to look at. And they're going to take that sale amount data and say, this must be the value of a unit in this building in general. They will look at the photos from MLS. They will do some assessment from that. But they don't have access to all the other individual units. So they're going to make some guesses.
They also look at the sales between April and October, and they average them out for July 1st, and then they make their adjustments. So average means half the time it's going to be right, and half the time it's going to be, half the time it's going to be above, half the time it's going to be below. So this is what I was talking about with the strata unit is the market value. That's why everyone gets pissed off when somebody sells low in a condo building because it affects everybody's value. That's how they perceive it. Mm-hmm. So I did have a seller once say to me, I'm going to appeal my BC assessment because I want it to look like it's worth more before I sell.
Yeah.
Which is actually smart.
No, absolutely. And so that leads into how do BC assessment values affect real estate values? How do we look at those from a real estate perspective? How should we look at those from a real estate perspective? And it's true that many people, I talk to a lot of people who look at BC assessed values and think, I want to buy a home and I don't want to pay more than assessed value. I want to get a deal on it. And I have to really, you have to kind of dive in and dig in to say that, you might be paying under assessed value and still overpaying for this unit if it wasn't assessed properly. And what we can't say is whether or not we can do some research and look at what other properties have sold, and we can do our own analysis to come up with a more pinpointed and customized value of that unit, whereas BC assessment has done a roundabout one.
Well, the other thing is we've been likely in those comparables and BC assessment hasn't. They're just looking at the data. And sometimes I was telling a client the other day, we were looking at properties online. I'm like, well, this is a faux nice property. And they was like, what do you mean faux nice? I said, well, the flooring is faux wood. It's a laminate countertop, and if you look closely, you can see it's like a lick of paint on a bit of a pig. So
she ain't pretty. She just looks that way.
Yeah.
Okay.
So that being said, this does generate a lot of phone calls. I got a phone call yesterday from somebody who all of a sudden said, okay, well, you know what? It looks like my property's worth more, and their assessment is actually lower. So assessment will follow because it's based on last year's data, and it's automatically 6 months out of date. If the market is going up, it's going to be behind. And if the market's going down, it's going to be behind. So it's like the goose on the train.
Yeah, I just want to qualify that by saying it's going to be behind on average. Again, they could be off on your own particular assessment. Your assessment could be low compared to other assessments in the area. It could be high compared to other assessments in the area, and you really need to, look at it on a case-by-case basis.
Let's talk about assessment in farm properties. So that's an interesting one.
Yeah.
Because farm properties are assessed way lower, or their taxes anyway are way lower. And the reason for that is because they get an exemption because they are paying farm taxes.
Yeah, there's a utility or tool available to them, I guess, where they can, if they are having farm status by selling a certain amount or using that land for the purposes that, of agriculture, and it can be shown that they're using it that way, then they can get a rebate on their taxes. And the way that rebate is the function of how they do that is they lower the assessed value of the property while it's being used for that purpose. It's not being used specifically as it's funny because, it's actually being used for more purposes than single family home, but you get a break because you're contributing to, providing goods and services to the community, using that land for more than just a beautiful place to have a perfectly green manicured lawn.
Yeah. So I just want to say that if certain things can really increase the value of your property that don't require a permit, if you are filing your permits for work done on your house, you're going to increase the value incredibly. Because BC Assessment pulls that data from the municipalities. If you are doing work that doesn't require a permit, like you're changing the cupboards in your kitchen or redoing your flooring, these things add value, but they're not going to be registered with a permit, and therefore BC Assessment is not going to pull it. So therefore, they're not going to see the fundamental change to your house.
So you'll be paying proportionally less taxes than your neighbors.
Right.
Give for those improvements.
Right. So there's 3 values on a house. One is the BC assessment, which is determines your mill rate and your taxes. The second is your market value assessment, which is what we give a property market valuation. And then the third one is your appraisal for your for your insurance and your
mortgage.
Yeah. So when we bought our house, we bought it for $900. It was assessed at $700, and the appraisal came out higher than the asking price.
Yeah, perfect.
Yeah.
Yeah.
So go ahead.
I was just going to say, let's talk about the difference between each of those really briefly. Like a market analysis that a realtor does is going to take into account market effects. It's going to look at comparable properties that have sold in the area, and we're going to compare them for sort of use, utility, condition. But what we're not able to compare them for, which is what an appraiser does, is we don't make adjustments for, let's say, a 2-car versus a 1-car garage. We can make more subjective assessments, but we're not trained in making doing an appraisal where we say, okay, this is so many dollars per square foot. This is so many dollars per square foot. This is got 3 bedrooms versus 2 bedrooms, and put a number associated with that difference in value. We can certainly discuss variable value, but we can't set a defined value, whereas the appraisers tend to do that. But what we do is we do look at we're familiar with what buyers are paying. We're familiar with what properties are selling for, and we're kind of connected into the heart of the market and have a much better feeling. And also we have the data available to, we have the data available to pull it together. Jane, you want to step in because I think you can probably rescue me here a bit.
Okay, well, I think an appraiser is looking at the past data for the last few months. And then we're looking at the past data and the current listings, and we're determining where the market's going. So we're a little more up to date. So
we're more strategic in the pricing.
Yeah.
We take into account the market factors.
And we're going to look at what else is on the market at the same time as you to see whether or not there's anything else that might compete. Because, for instance, I had a client who listed a house on Christina, and this was like 10 years ago, and in Colwood. And right at the day that we were going to list, the neighbor's property listed. And we're like, darn! So they were listed just a little bit lower than what we thought we would go for. They were closer to Goldstream. They were actually on Goldstream. So we decided, okay, we'll list. And then we looked really good compared to them. But it was sometimes, and I don't think we were near the BC assessed value at all. We were way above it.
There's a lot of people out there that if they could buy a home today for the BC assessed value for that, they're very happy because they know they're getting a good deal. There's nothing wrong with, we take all of these numbers into account. We're kind of maybe saying BC assessment isn't a great tool for pricing your home, but obviously it's a general tool, and we want to look at that number. We want to look at, if you want to get an appraisal, we want to look at that number. Jane, so many times over my career, I've seen people list a home and they've got an appraisal and they've posted, priced, $50,000 below appraised value. And it still sits there and sits there. It's $100,000 below the appraisal. It's the market that determines the price.
And I just want to say the third value that we were talking about is the appraised value and also the insured value. So the appraised value is looking at what it would, what the lending value is. So if somebody is put down 20%, they want to see whether or not the bank should finance. They want to make sure you're not financing a shack. But also when they're looking at insurance, you want to make sure that you are insuring it enough to replace the house in case something happens. So like, recently a friend's house burned down and they were appraised for about, I would say probably 90% of the value of the house. And so they're going to have to come up with the difference.
They were underinsured because their insured value was lower than the actual value. And the value is not the land value. It's going to be the replacement cost on the home. It's going to be based on the structure when you're looking at that information. And I just want to say too, because Jane, the banks, what you said there, I think was, they don't want to lend on a shack or something like that. They will obviously lend on a shack. They just want to make sure, and I know this isn't what you meant, but they want to make sure, the lenders want to make sure that they're not lending you, $5 million for, a $200,000 shack. They want to make sure that they're not being, there's no fraud happening. So they will lend a certain percentage of the value, usually up to 80% of value, for a investment property up to, and then with CMHC insurance, the mortgage lending insurance, you can get up to, 95%.
So, and the reason why they're even doing this came into effect, I'd say like probably 30 or 40 years ago, is because they want to just determine what the mill rate is going to be and how they're going to pay the taxes. So they look at their budgets, they look at the value of the property, and then that's why your annual sum may not actually increase, even though your assessment will go up.
Right. So, yeah. And that's a big one that a lot of people think, oh, my tax value went up, so my taxes are going up. And that's not necessarily the case. If the municipality needs, $1 million to run their business and all their trucks and all their, road maintenance and all that stuff. Obviously they need more than that, but this is an example. If they need it last year, $1 million. If they need this year, again, $1 million, and all the property values have gone up, they're still going to equally assess everyone so that they get their $1 million that they require for funding.
I'm just looking here. There's a great resource on their website called BC Assessment Maps.
Mm-hmm.
So you can look at how your property compares to other properties in the area. So I'll just put this link in here as well. So it's anyway, it's obviously more complicated than we are. There you go. You can look there. Then we are saying it, but essentially what you need to know is it's not related to your value.
There you go.
But give us a call if you really want to know what the price of your house is.
Fair enough. Yeah, and the other thing is if you do want to challenge your assessment, I think that the window is quickly closing on being able to challenge that. Do you?
So you appeal.
Yeah. If you do want to appeal, you only have so much time to do that for the year.
Yeah. So actually, I have a client who does this for a living, which is interesting.
Helps people appeal, or
he's on the appeal board.
He's on the appeal board. Okay.
So here I have
could have had them on as a guest today, Jane.
He probably can't talk. So there's a link to how you appeal. So essentially, the notices are mailed.
Link, Jane.
It's in the chat. It's in the.
You got it. Yeah, got it.
So the deadline to file your appeal is January 31st, and then the assessment appeals are heard by a panel, and they're between February 1st and March 15th. And then you will pay your whatever taxes. Then they will decide what the final taxes are going to be, and you will pay your taxes July 1st. Now let's just talk about one thing. When you go to sell your home, so let's say you sell your home in May, you will pay a portion of the taxes from January to May. And let's say you buy in August, you will pay a portion of the taxes from August to December, and the lawyer or notary who is doing the conveyancing for your property will figure that out. So you're always going to pay a portion. It's due July 1st, and you should talk to the person who you're buying the property from to say whether or not you're going to be occupying the property or not, because there is a bit of a discount if you live in the house. So you may, if you're going to be living there, what is it? What's the $500?
I want to say homeowners rebate, but that's not right. It's okay. Well, anyway, there is.
I'll find out.
It's also, I think, if you're elderly as well, there's also a rebate for being. I haven't been that age yet. I'm getting there.
Okay, homeowner grant.
Homeowner grant, thank you. So further to what Jane was saying, if you're the seller and you're selling your home and you've listed your home and you've already paid taxes because you're doing it after, you've listed it after June 1st, you will be paying your taxes. And then, as Jane said, the buyer will be paying you back for the proportional share that they're going to be in the home for. Whereas if the buyer buys the home before June 1st, July 1st, pardon me, they will be paying responsible for paying the taxes, and you will actually be paying them. You, the seller, will be paying them your proportional share of what you use the property for based on your use of the taxes, and that's all dealt with by the lawyers at adjustments.
Right. And so you do have to be living in your house and in the province. If you're working outside the province, you may not qualify for a homeowner grant. So I believe it's 6 months plus a day living in the house. And there are also other factors about where you're going to be living. So if you own a property, but you're going to be living in a care facility, this may affect things. You
You
just
can also, and that's a good point too, is you can also defer your taxes. And not a lot of people, not everybody knows this, but if you are, and that might have been what I was thinking of there, but you can defer your taxes and not pay taxes, your property taxes, but then they have to be paid when the property is sold. And that deferment, I think, I'm not sure what the qualifications are to be able to defer them, but I think it's age related.
It's 65.
65. Okay.
Grant for seniors. There's also a grant for veterans.
Mm-hmm.
So the grant for seniors is if you're 65 or older and your property is worth less than 1.975 million. And the reason why they have this, why this even came in, is because people in Vancouver were paying tons of money for tax assessment, and they, been living in their house for 30 years, and all of a sudden their property has increased in value. But I will say it does add up very quickly when you go to sell.
Yes. Yep. But it does help people to afford to continue to live in their home, and not avoid the taxes, but defer them for a number of years. And it just gives some people that extra that they need to be able to continue to afford that little home they bought, 40, 50 years ago. They've been living in forever, and the whole neighborhood is built up around them, and now it's highly valued, and they still, just like the movie Up.
So if you are applying for homeowner grant, there is a form on the back of your BC assessment or your tax assessment that comes in the next few months. You just fill that out, and then you go to your municipality. Now they are moving to an online format, so you can submit there as well and pay electronically, which happened during COVID. So, and if you do not, let's just talk about if you do not pay your taxes.
Yeah. So then the city can actually come after you, and they can actually get authority to sell the house. And
right.
There's a tax sale. You can watch for these tax sales once a year and go and bid on it.
Yeah. And that usually happens in September of the following year. So they're going to try and get you to pay your taxes. If you don't, then you can go. And even then, when you go to the tax sale, you can pay it then. But I don't suggest you go there.
Well, okay. I don't suggest you get to the point where you have to go there. But if you do go there, pay it off if you can.
Yeah. So you wanted to talk about that article that you read. You mentioned that you read an article in Vancouver paper last week.
I don't even remember now. It was last week. Wait. I wasn't prepared for this.
Oh, wait.
You're talking to somebody else.
Tax assessments, a wealth tax. I wrote it down.
Tax assessments, the wealth tax. Nope, that wasn't me. It was somebody else. Sorry.
Okay. Anything else you want to say?
No. The core of this is that there's lots of different ways to evaluate a home, and it really depends on the purposes that you have. I mean, are you trying to make sure you don't pay more taxes than are necessary? There are some homes that are highly over-assessed. There are homes that are highly under-assessed, and when it comes time to sell your home, people do look at that number, even though it's not a number you want to use to set your home price. It is a number that people will use to refer and see how it compares to other home assessments in the area. So it's important to know these numbers and know what they are and how they come together and what their purposes are and how they differ.
Yeah, and I just want to say, often when people I think it's not good practice, but when people are looking to buy, they look at that number, and if it's low, that will be their justification for offering less. And it has absolutely nothing to do with your property value.
I helped some clients. They were very wonderful people. They like spreadsheets, and they were very analytical when it came to the properties that they were looking at and comparing them using a spreadsheet and looking at assessed values. And when it came time to write an offer on a property that they loved, they were trying to justify their offer, and they couldn't justify a higher offer that I knew was going to be necessary to win out on this property. And we had to have a long conversation about assessed values, because it was the assessed values that were holding them back. And they're so glad they bought, and they ended up, winning. They did stick to their guns, and they paid less than I thought. They ended up competing and still won out. But you have to be careful. You can lose. I always tell, you can lose by winning. In other words, you could win on a multiple offers and pay too much. And you can also, anyway, you can also
not win the property because you're basing your offer based on assessed value.
Exactly. And then you might be in a worse situation, because the property values in this market have been going up and up and up and up. And everybody I've talked to or I've been working with that 6 months ago wish they'd bought, but they're still looking, and now they're paying an extra couple $100,000. So, assessed value versus market value, understand what the trends are doing and try to get ahead of it.
Yeah. And I will say, if you're going to buy, especially if you're going to buy for the long term, that really consider that. Don't let that $1,500 or whatever get in the way.
When I first got licensed, I was really wanting to be, I don't want to push anybody out of their comfort zone. I don't want to push people to pay more than they need to. And, there was a sort of at the time, and going into it and being a little ignorant of what real estate is like, I guess I felt like, I definitely don't want to be the agent that's the pushy agent that's pushing people outside their comfort zone. And I'm still not, but I certainly feel that there are times when we really do need to show and really try to illustrate for our clients, it's really important that you consider paying a little more here, because it will actually save you money in the long run. Or, you won't be looking for the next 6 months, and all that time and energy and wasted time and energy that you could be, settling into your new home and making a life and going on with other projects in your life and moving your life forward in other ways. So if you can afford to buy. Don't wait.
Yeah. Well, philosophically, you make an interesting point. And we always say to people, you really want to offer at a price where you won't regret losing out.
Yeah. You won't regret losing, and you won't regret winning.
Right. And we offer a strategy. So it's up to the buyer to determine what the value is to them. Mm-hmm. But it's interesting. It's interesting to watch people go through the process of, first of all, coming to a realization of sticker shock and what's happening, and then to help them determine what they want to do when they get to a house that they really, really, really like. Mm-hmm. But in the end, I do say, I am part of the woohoo crew, that the right property will be there for you when you're ready.
I tend to be part of that too, but I've lost some of that faith in the market recently, because I've advised people on that. We're going to find you the right property, and you just wait, and things always change, and the market opens up, and there's waves within the market, there's sub-markets and so on. But there's a few people that I've been working with that are now, so far behind the train. Yeah. And that's frustrating for everyone.
Yeah. Okay. So, well, hopefully the market does pick up. We are looking at listing properties now. This is a great time. It is definitely a seller's market. So if you're interested in unloading a property, this is a good time. Andrew, how do people reach you?
They can reach me by calling my number directly, 250-360-6106. Reach out by email, info@andrewplank.com. Those are the best ways to reach me. Text me is a good way, 250-360-6106. Jane, how about you?
Well, if you text, tell them what your name is, because sometimes I get text messages. I don't know who's talking. Yeah. My name is Jane Johnston. You can reach me at 250-744-0775. My email is briarhillgroup@gmail.com, and I have two websites. One is briarhillgroup.com, which talks about buying and selling. And then all of our videos, as well as information on neighborhoods, are on VancouverIslandTime.com. All right, everybody.
Peace.
Have a good day. And it's Martin Luther King Day. So
excellent. Fun fact, Martin is my middle name. and I was born right around Martin Luther King Day shifts around, but I was born on January 15th. So I think there's some correlation there.
Well, let me just see. If you can't fly, then run. If you can't run, then walk. And if you can't walk, then crawl. But whatever you do, keep moving forward.
I love that quote. Absolutely.
Have a great day, everybody.
Bye, everybody. Thanks,
Bye.
Jane.